Welcome back to my final morning report chart appraisal on Friday the 22nd of July with me, Richard Perry, market analyst at Hansett Markets. Let's look at gold. And we had this sort of move to the downside initially on Wednesday, and then that candle has basically been completely unwound by yesterday's action. That action came on the back of the sort of comments by, or the interview with Japanese Governor, Bank of Japan, Kuroda. And he sort of ruled out, or looked to rule out, helicopter money, and the market moved on the back of that, even though this was sort of a month ago, this interview now. The market still moved on that, and the safe haven trades started to sort of come back into favour on the back of that. So gold pulled higher, along with the yen actually yesterday, but again this is a little bit of a retracement move. Yen's lower today, and gold is also lower. This move at the moment is still corrective, I think, on gold. The near-term correction is still intact, although you're still sort of lacking the real decisive selling pressure. I think it's still an unwinding move. RSI back towards 50, around about where it got to in late June with the pre-Brexit move. MACD line's just unwinding quite serenely, quite nicely back towards neutral, help renew upside potential. And I still think 1306 is a buy, or a medium to longer term buying area, or the start of a very good buying area above 1260, between 1260 and 1306. So we're seeing a bit of a sort of a near-term consolidation, really. We're not really seeing too much direction, although there is a slight sort of drift to the downside. I don't think it's precipitous in any way. I think it's more of an unwinding move that will help you buy in due course. But there is initially 1335. Look at that resistance, the pivot line resistance that we've had. Caught the high 13 back in 27th of June. Then subsequently started to form the support, broke down, and then formed the resistance. And again, yesterday, not too far off it, was it? Just $1 away from 1335 before turning low again. So that is clearly a market resistance that is being looked at. Now, we are, again, relatively sort of in with a sort of mildly negative bias due to the fact that we're underneath 1335, but again it's nothing too precipitous because we've rallied back from 1310.50 area, and it's just it is quite a difficult play, I think, at the moment, gold, and you could see a bit of a negative drift continuing, but again there's no real major selling pressure going through this one. So in terms of direction, I think we still need a catalyst and the market to move on in a decisive fashion. It sort of looked to be coming through yesterday. It didn't, or didn't follow through, or hasn't followed through yet today. So it looks like we're still waiting for this decisive move and to sort of form the proper support. But at the moment we're still supported above 1306. But again, as I said, if you get back in towards 1306, I think that is where you start to look for the medium to longer term buying opportunities again. So I wish you good luck in your trading on gold today, and I will speak to you again next week. Thank you.